July 14, 2025. Bitcoin has smashed through the $120,000 barrier, reaching a record $123,205 and capturing global attention. This isn't just another price spike. It marks a new era of mainstream acceptance, driven by institutional investment and shifting political winds. Unlike past bull runs fueled by retail hype, this surge is powered by major financial institutions, adding stability and long-term confidence. The ripple effect is clear. Other cryptocurrencies like Ether and Solana are surging, and traders see dips as buying opportunities, not red flags. Over $1 billion in short positions were liquidated last week, fueling the rally, while open interest in Bitcoin futures has hit a record $86.3 billion. The market is buzzing, with analysts eyeing $125,000 as the next resistance and $112,000 as strong support. Bitcoin's ascent signals a deep, sustained interest from sophisticated investors, setting the stage for what's next in digital finance. A major catalyst for Bitcoin's surge is unfolding in Washington, D.C., as Congress debates landmark crypto legislation during Crypto Week. The push for regulatory clarity is drawing in institutional investors who've waited for clear rules before committing big capital. President Trump's pro-crypto stance and White House support are energizing the market. 3 bills are in focus: the Clarity Act, defining digital assets as securities or commodities, the Genius Act, regulating stablecoins, and the CBDC Anti-Surveillance State Act, protecting financial privacy. These measures promise to unlock economic growth, strengthen the dollar's digital dominance, and address privacy concerns. The market sees this legislative momentum as a green light for innovation and investment. For the first time, the U.S. appears ready to embrace digital assets with a clear, constructive approach. Investors are responding with renewed confidence. Wall Street is fueling Bitcoin's rally, with institutional money flooding into spot Bitcoin ETFs. Since their approval in early 2024, these ETFs have attracted $151 billion in assets, with $15 billion in net inflows over the past 2 months alone. Last week saw a record $2.7 billion in new investments, creating a supply shock as ETFs buy more Bitcoin than miners produce. Unlike previous retail-driven surges, this rally is led by pension funds, asset managers, and endowments making long-term bets. The largest daily ETF inflow this year, $1.18 billion, shows major players are all in. Institutional adoption is cementing Bitcoin's legitimacy as a portfolio staple. As regulatory clarity grows, even more conservative institutions are expected to join, potentially driving prices higher. With Bitcoin at new highs, the big question is, what's next? Experts predict continued growth, with some forecasting $200,000 by year's end as more institutions enter the market. U.S. regulatory clarity could set a global standard, encouraging other countries to follow suit. Some speculate the U.S. might even create a sovereign wealth fund for digital assets, further legitimizing Bitcoin. But risks remain. Potential trade wars, inflation, and rising interest rates could challenge the bullish outlook. For new investors, education and caution are key. Volatility is part of the game. Consider dollar-cost averaging and only invest what you can afford to lose. The future is bright, but navigating it wisely is essential.